Yo, what's going on, guys? Everything is Zach back again with another YouTube video. Today, we're just going to be going over another stock market video. We're going to be kind of talking about what is it going to take for the stock market to recover. And this is a completely opinionated video, but my opinion on what is it going to take for the market to recover. All the markets, fundamentals and technicals. So we're going to be looking at the chart, and then we're also going to be talking about the current state of the economy. And this is just obviously not financial advice and just opinions. So I appreciate you guys clicking on the video. I hope you enjoy. I hope you find it interesting, and make sure to smash a like, comment, and subscribe, and definitely comment any of your thoughts on the video, because I would also greatly appreciate any feedback that anybody can give me. So that'd mean a lot to me, and it would be cool to share our thoughts together. So but without further ado, let's hop in the video and let's start discussing the market and what it will take to recover. So to kind of start off simple, and to just start out, I would go over just the technicals, and then but this is the quick part. The technicals just of the S&P 500 really. What would it take to kind of get out of this trend that we're in? As you can see, we're in a downtrend. These moving average clouds that you see indicates that we're in a downtrend. And we're even in a downtrend on the monthly chart. So what you can kind of do, you get the idea that we're in a downtrend from those, and then you can also start to kind of draw trend lines and see how the price is behaving along these trend lines. So you can kind of see where it's repeatedly getting knocked down. This is almost like a 3-contact trend line, pretty much. And you can kind of see that is where the market is kind of being shot down. Right there at the top, that's resistance. So that is, if it can get above that, you can kind of maybe start saying, oh, the market's kind of recovering in the technical analysis view. So with the chart, obviously it's going to all be reliant on the actual economy, but the chart can offer this like info on kind of where the buyers and sellers are, so you can actually get another feel. So this is a huge trend line from a while ago, but it still comes in play. It still respects it. You can see here, and it's even been choppy around now when we've been falling very bad. So you can kind of see here that you have this view where we are in actually this kind of flag, and it's not good that we're breaking down. You can see we actually broke its support. That's not good. So I would definitely say that the first step, technicals wise, would kind of be to regain this, and then you also have to look at the big levels that the market's reacting around, and that's like the 400 level. That's an obvious one, just because it's that whole number 400. It's a psychological thing. It has trouble around 400. It always has been. And that's a big level to get back over. That's a big hump, along with these support and resistance trend lines that we're getting. But let me remove that one. You can kind of just see here that you have this flag, and that's kind of what I'm seeing on this chart right now, to be honest. You also, you don't have much else. I mean, go to the daily chart. It's just been in this long consolidation, and it broke to the bottom. It broke the bottom side of it, retested, and came back down, and now it's looking to retest again. So you're kind of, and again, you guys are watching this video way later, so this is kind of irrelevant. So really, let me get to the fundamentals actually. But basically, you want to see it break those levels, and fundamental wise, I think with the economy, in my opinion, I don't think the market's going to see turnaround until the Federal Reserve stops quantitative, or they start quantitative easing again. I think when that happens, the market is going to rally, and I think it's going to, I'm not saying rally a bit, I'm saying rally to new highs and start its power again, really. I think that's what will really revive the markets, when quantitative easing kickbacks in, interest rates are very low, and I think they want to do that. I personally think that's what the Federal Reserve wants to do, but they know they can't do it right now with inflation soaring high. And who knows, they might not go as easy as they did last time on interest rates, just because of what it kind of led us to. Obviously, there's other factors, I know that. But I think that's one factor. Definitely the interest rates. I think if the interest rates stay high, market's going to stay choppy or down. I can't see, especially growth stocks, the NASDAQ taking off with interest rates like that. Along with interest rates, then you have inflation, which is kind of paired with it. They go like and like kind of. And interest rates are used to combat inflation. Until inflation starts settling down, I think the worry with it is just going to keep dragging the market down. Once inflation does start to start kicking down, I do think the market starts seeing an upturn, because everybody's waiting for that peak of inflation, but nobody knows when it's going to be. Everyone thinks it's each time they announce it, and it never ends up being it just yet. And the signs, in my opinion, I don't even see it peaking yet. I don't see it peaking maybe for a little bit because stuff is still going up. There's still this war in Russia and Ukraine, and I think that's actually drives me into the third factor, the Russia Ukraine. It's not a full blown war, but it is a crisis that's really affecting the supply of many things like food, oil, and stuff like that. So that's definitely going to take a toll on the market just by destroying supply in a lot of these areas like food and agriculture and natural resources. So with that, you keep having that supply restraint and then restraint. You have these interest rates now kicking up, making it harder for companies to be generating this money. And then also you see companies laying off workers. So everything's looking bad now until that stuff settles down. I know it's kind of sounding obvious, but it's not in the real time. But that's when I'm thinking the market's gonna really start picking back up. Interest rates starting to drop. And I don't mean just drop a little. I mean drop like back to close to zero. When they start becoming confident again in the market, because right now you could say we're going into a recession maybe. Well, it's from now June 21st. The talk is very high that we may be entering a recession, and so that's definitely a possibility. If that happens, the job market may become worse. Just all of that's gonna be a mess. So until that stuff gets resolved really through the Federal Reserve and other factors, I don't see the market coming up. But the smaller things that could, I think, boost it to start its uptrend, because again, right now you can see we're in a clear downtrend. To start an uptrend, I think really just one of those need to be solved. Well, two of them are like and like. But if the Russia-Ukraine war goes away, boom, inflation is gonna calm down a lot. But that war is probably not going away anytime soon. But that's very paired with inflation, because inflation has been going up because of that supply restraint, and it's been driving up these interest rates now and driving up the prices of everything, making it harder for the common person to be getting that stuff. So that's definitely taking a toll on the market, and until that stuff is resolved, I just can't see it going anywhere. But once it starts breaking some levels, resolves in an uptrend, and we have the quantitative easing back, and there's that confidence back in the market, I think we could easily see new highs. And I don't think this will be forever. I don't think it's going to be anything like '08, in my opinion. I think it could be bad. I do think it could be bad, but I don't think we would be seeing the longevity of '08. What was this? This was like almost 2 full years of its full downtrend. And I do think the uptrend that we may see after this could even be more violent, like in a good way. I don't think it's going to be slow and gradual. I don't think it's going to take years to see an all-time high again, like 4 years like it did in '08. I think it will probably be less than a year or two. I don't think we're going to go too much lower, and I just think that a lot of the stuff right now is priced in unless inflation kicks even worse. But the interest rates have been kind of predictable at the moment, so once those start to settle down and interest rates and inflation settles down, I think that's when we can maybe see the market completely recover and us really start to see that recovery. But I want to know what you guys are thinking as well, so make sure to comment what you guys think for this, and make sure to drop a like as well, comment like I just said, your thoughts, and I hope you enjoy the video though. Have a good one, and thank you for watching.